So yeah, we can just get right into it, Jay. I know Robinhood, we got in, I think it was 2 days ago at $20.90. We had a little bit of a drop off today. I think as low as $20.17. I heard a little bit of panic in the discourse. I'm just curious, what are you thinking here about Robinhood? Obviously, we haven't hit our stop loss yet. This is a swing trade, so I'm personally not worried, but I think people will get a little bit more comfortable if they hear coming from you.
Good. Well, I don't think that there's any reason or a cause for concern for two reasons. One, the trade isn't invalidated yet because we haven't hit our stop loss yet. And two, even if we would hit our stop loss, then I very much would struggle to see how that's a problem because we've even added the position sizing aspect to it. So if you are following us, then you're risking 1% on that trade. And if we do get stopped out, and this is the first thing that I kind of want to address, if we get stopped out, chances are that a lot of stocks are going to drop off a lot, and that some of our entries from lower down are probably going to hit their entry conditions. So that's maybe Palantir. We'll go over that later. But so far for Robinhood, if I'm just looking at this from a zoomed out perspective, and even then just zooming in locally, we're still very much making an uptrend. So if I mark that out, we've got that cup and handle pattern here, but more important than that is the fact that we're locally making higher highs and higher lows. Now, that is going to change only if price actually gets below $19.07. But I understand that our stop loss, like that's a bit far away from current price, and we are working with a stop loss at 19.59. So we're not necessarily holding it down all the way to 19.07, but technically it would be fine still for price to hold anything above that. Now, 19.59, I'm just going to mark out that level. That's our red line, that's our stop loss. Now, so once again, I'm looking at this. This is a very big, scary candle, minus 5% here. But you got to remember that before we recently made a top, right? We dropped down 16% and then a little bit later on down the line, we dropped down 10%. And every time we're still making higher highs. And now we're dropped again 9.6%. So we even have some room left for Robinhood to come lower. And this is the first thing that I would address is there's a reason why the stop loss is 19.59 and not $20 or not 19.9. Why is that? Well, because it's even somewhat likely that we would come down lower. Now, we don't want to add to our position. That's not the goal at all. We just need to be aware that we got a slight little area in there where it would make sense for price to come back down to basically sweep everybody with stop losses below $20. Hopefully it does that and then creeps back up. Now, that 20.9 level is obviously a very important level. We hit it as resistance and we broke it, we held on top of it, and now we're back below that level. But as long as our stop loss isn't hit, I still think that it's more likely for Robinhood to hit our first target at least at 23.74. Because this week we've also made a new higher high. So technically this is perfect, right? An uptrend consists of higher highs and higher lows. So from all these highs to these lows, those are shakeouts, right? 17%, 10%, maybe another 10% shakeout. But as long as we're generally at the right side of the market, there's no problem. And if the market, right, for people that are concerned that the market would drop down way lower, that's exactly why we do have a stop loss, is because if we do hit our stop loss and if we do get back and test all of these levels into resistance, then yes, then there is a good chance that we come back down maybe to $15.65, but we'll readdress that. So as long as our stop loss hasn't hit, I really think that we shouldn't jump to any conclusions and just kind of sit it out, wait it out. And honestly speaking, this is the exact reason why the market is coming down. It's coming down to make sure that people who are oversized or over leveraged or who have way too much position size going on in their long position, they get so scared and they cannot bear that little drawdown. So they get out of the position just before the market just continues with the trend. Now, again, if we do lose $19.07, get below that level, then I think we could potentially look for Robinhood to come down potentially way lower again. But that is not the main scenario. So let's just stick with the bullish thesis. And if this gets the stop loss hits, we'll just like readdress and reassess. Very important. Once that stop loss hit, we're not going to do anything. It's not that we're going to say, oh, stop loss hit, let's immediately take a position again. So then probably, like I said, charts are going to come down lower in general, and we'll get some of our entries maybe on Palantir. So that could be the next one that we can go over. So I wish I could give you like a more elaborate update, but there's really nothing to say apart from we haven't hit our stop loss and we're on
Yeah.
track to our higher high at 23.74.
No,
And
that was a perfect update.
this is also what separates, well, people that generally then do well in the market consistently uh, from people who are still struggling a little bit. Like one of the key features is that you need to allow your trade to go to your stop loss. And when that stop loss hit, you're also completely fine with that because you're not wishing that, oh, this Robinhood trade here is now what is going to double our $500 account. No, not at all. We're looking for a decent risk reward play. So if we just once again go over the fact that we've entered at 20.9, right? Stop loss 1959, and then a target at 23.74. That is more than a 2-to-1 risk reward trade. So hypothetically, we stop out and the next position that we enter hits the target, we will have made back our loss and we will be on track to be profitable again. So I would say there's no reason to panic or worry. This is very, very normal.